Illovo is next. Remember, this is basically a sugar producer with operations all over the sub-Saharan African region. Yes, here in South Africa, but it had big involvements in Zambia and Malawi as well, where it also maintains separate listings. Their 51.5% shareholder, though, was a British food conglomerate called Associated British Foods. And after a period of weak performance by Illovo because of sugar prices and some other missteps, ABF has actually come out now with a buyout offer at 25 rands a share, which has elevated the market capitalization of the company, because obviously now the share price has gone close to that 25 rands a share buyout offer. Market cap, though, for the record, is 10.95 billion rand. Price to earnings ratio at that price relative to historic earnings is 29.9. Dividend yield ditto at 3.8%. So Petri, well, let's put up the share chart, because you can see what I mean when I say it was doing badly and then shoop, up it goes to the buyout level.
So, I mean, it gets, if the deal goes through, it gets bought out at 25 rand. It's like a rand below that at the moment.
Yeah.
So
which tells you that the market thinks that the British are likely to have the money and that there's not going to be a reason.
And also that they're probably, buying it. I think it's probably valued a bit more. Some people are calling it valued at 28 rand. So they're probably buying it for a bit of a steal. But
if somebody else thinks it's a steal, they can come and rival bid at this point, and that's not happening.
That's not
happening.
But
I suppose that's also hard when you've got a case when they already own 51% and they already control the board.
Yeah, do you really want to now go and bully someone else off his own potty,
Not likely.
So, so I think, and also what Associated British Foods is doing, or AB Foods, is doing is, they want to leverage from Illovo's exposure to the African market, and they want to sell sugar into the African market.
It still works that way, that the African sugar can get imported into Europe and get like a most favored nation sort of deal, although it hasn't really helped all that much because the prices have been relatively soft.
Yeah, prices have been relatively soft, and demand within Africa is growing. The African economy is growing.
Well, that's actually a good point, because it's not only about sending sugar back home to the US and the UK and all these other markets. There's a high substantial in Malawi and Zambia. Most of the sugar they produce gets consumed in those countries.
So we can now, or they can now, set up a business where they produce locally on a context on a continent basis and distribute locally. So that's their motivation behind it.
Okay, but look, as far as this thing's concerned, there's not really much point talking about it anymore, because if you buy it now, there are people who run these deal arbitrage funds who buy shares like this, and then they earn like an annualized return a little bit higher than cash, provided and then they scoop up the shares, and then they wait for the final approvals to come through, and then they close it out.
But the margins are very small in that.
Yeah, so and for a normal retail investor, it's too expensive to buy these shares and then wait for the buyout. It's a waste of time. You can do better.
Correct.
Okay, so I guess not hot at the current level.
No.
Yeah. Okay.